Starting capital and commissions. If you want to come into this game, you have to treat it like a business. You can't come into this game with a small amount of money and expect to make a living out of it. It just doesn't work like that. You have to think of it as a business, a normal business. What happens if you went to buy a franchise? A good franchise is not going to cost you $1,000. A good franchise is going to cost you $100,000 or more. And there's a reason for that. It's because it's a good franchise, it has a good outcome, it's expected to make money. The same thing with trading as a business. If you want to go into a business with $1,000, the chances of success are incredibly low, if not impossible. The probability of success diminishes with smaller capital, full stop. The reason why there's so many brokers out there touting that you can open an account for $500 or $1,000 is because at the end of the day, that's money in their pocket. They have no downside. And they just want the commissions, and they see your account capital $500 or $1,000. It's just basically a punt, and you're probably going to lose it. So we're going to show you some real numbers here, and I haven't made them up. It's not fictitious. It's all quite real, even though it may not be what you want to hear. So what I'm looking at here is 200 trades of the US systematic power setups. These are my real trades and my real results. I want to show you the difference between the gross P&L, which is the red line, and the net P&L, which is the blue line. So you can see here the difference using a discount broker. I have 3 accounts with Interactive Brokers. They are a discount broker. There's no reason why you cannot walk in off the street and pay the exact same commission rate as I do. That is the difference that commissions have taken on my account. So 0.72 of 1% is what it's cost me to facilitate that trading, and in my view it can't really get any better than that. Now this is a large account. I want to start to show you what happens with a smaller account. Okay, just to clarify this chart, the left-hand axis up the top there, this is the profit and loss. So we started with $100,000, we dipped down to around 92, 93, and we're now up around, well actually we're now up around about 113, 114 now. This is just the number of trades down here, so about 217 trades. Here, I've again taken a large account, $100,000. So what I've done is I've taken a number. I think I took 4 CFD brokers, retail CFD providers in Australia, and I averaged their commission rates. Okay, I just averaged the whole lot. So it's not the highest and it's not the lowest. Some of them wouldn't tell me. In fact, you go to some of these CFD providers, they don't tell you what their commission rate is. So just be a little bit careful. Now, I should also say this is simply commission as well, all right? It does not include your funding charges. It does not include your platform fees or anything like that. If we go back to Interactive Brokers, that does include funding charges because that's a real account, but there is no platform fees. And with CFD providers, there are different funding charges, there's different platform fees. You can see there's quite a substantial difference here, and this is just the commission difference. The average commission here, this is US trading, okay, this is not ASX, this is US trading. $17.50 is the minimum ticket price on the average that I could find. Some are as high as 25. Some wouldn't quote me a minimum ticket price, but I know there is always a minimum ticket price. So the average here is $17.50 per trade. That's the average. So you can see there's quite a substantial difference and there's quite a substantial drag on this particular account if we go and use an Australian CFD provider. If we compare this average Australian CFD provider with a discount broker, commissions account for 65% of the profit. 65%. That is the difference in the profits using 2 different brokers. Now, I get quite annoyed when people come to me and say, I can't be bothered changing brokers. Well, I tell you what, there is a very good reason why you should be bothered to go and change brokers. It's your job as an individual trader. You have to get your drag on your account down as much as you can. Drag comes from all sorts of different areas, okay? Drag comes from commissions, it comes from platform charges, it comes from funding charges. There's brokers out there that pay you 0 interest on your unused funds. which is just ridiculous. So it's up to you to make a broker work as hard as they can for you, not against you. Trading's hard enough as it is without adding all these extra drags on your account. Now, I had someone tell me the other day it's very, very cheap to trade the XJO. There's no commission. Believe me, these guys don't do anything for free. They're in it for money. They make a spread, and you'll find the spread they make you is a lot wider than paying commissions. So just be careful. Just negotiate as much as you can. So that's the difference between a discount broker and an average Australian CFD broker trading US equities with a large account. Question here from Peter, IB for all your trades or just US market? Peter, I use IB for all my short-term trading. I have 3 short-term accounts. I use IB. My longer-term growth portfolio, specifically my self-managed super fund, I use Macquarie Edge. Commissions just aren't really a problem with that. What we're going to be doing is looking at a smaller account. Okay, so this is a $5,000 account using a discount broker. Remember, it's the exact same trades, exact same system, exact same trades for the exact same period of time, but it's a smaller account. So Interactive Brokers, the minimum ticket charge is $1, and you can see the drag here actually increases significantly. Okay, so the only difference between this account, or that account right there, and this one right here is the account size. Everything else remains the same. And the reason why there's a big difference is because a smaller account in percentage terms has a larger drag inflicted on it because all the brokers charge a minimum ticket price. Now, Interactive Brokers charge a minimum ticket price of $1 per trade, whereas the Australian CFD providers have a minimum ticket of $17.50. Dan has made a comment, 150 trades to break even. That's a function of the particular system at the time, but obviously if we go back and have a look at the bigger account, well, break even comes in at about 89, 95 odd trades break even. So that's a function of just the flash crash that caught us out there, but trade long enough, that stuff will happen to you. Michael has made a comment, I saved about $900 commission in the last year by switching from retail broker to IB, and that's just in the growth portfolio. Congratulations, that's a very, very good decision. It's a decision that's helping your bottom line, not the bottom line of the broker. Don't be lazy, get across there and change brokers. Peter, do you get $1 per trade on Aussie shares? No. Aussie shares are $6 minimum, or 8 basis points for Australian shares with IB, still cheaper than anybody else out there. Now here's an interesting chart. This is the exact same strategy with a $5,000 account using your average Australian CFD provider. The reason being is the minimum ticket is $17.50. And that's quite a disturbing chart in my view. I looked at it, I double checked, I did everything I could. That's what I came up with. You have zero probability of being successful, regardless of how good your strategy is, if your account size and your commissions being charged are out of whack. Now here's a big mistake people make. People come to me and say, look Nick, I've got $100,000 to put in the market, but I'm just going to try with $5,000. It's the absolute wrong thing to do. The better thing to do is take your $100,000 and just lower the risk to a comfortable level. If you drop your account size down to $5,000, all of a sudden you're going to be inundated with commission and it's just going to drag you down. I had a complaint recently. It actually came from one of the CFD providers, from one of their clients, and he was a subscriber of mine saying he was extremely disappointed about the performance of his account and terminated his subscription. Now, I actually got his account statements. First and foremost, he was trading a $5,000 account. His actual profits and losses from my recommendations out of that $5,000 equated to $138. Out of that $5,000, he'd paid something like $600 commission, he had paid $800 in platform fees, and he'd paid something like $250 in funding fees. Now, he was annoyed at my service, but in actual fact, the problem was his account size was way too small for the commission he was being charged. So the rule of thumb here is if you've got a smaller account, you've probably got very, very minimal chance to actually be successful. So let's consider some solutions. First and foremost, if you're going to trade short term, understand that you have a lot of things working against you. One of which, and the most serious of which, is commissions. Commissions work against a small account short-term trading. What are other things that work against you in your short-term trading? Slippage. Slippage is a drag. Slippage is an expense. If you are forced to pay data fees, like most CFD providers force you to pay them, then that is another expense. You don't have to pay that stuff. I mean, interactive brokers, I don't have to pay the data fees. I have the option to pay them yes or no. But why would I pay them? I don't sit in front of the screen all day. So if you are forced to pay them, consider that. It's a more expense that you have to overcome. And in terms of your account size, it may be a very, very large expense. The slippage, platform fees, commissions especially, funding charges are very, very important. The CFD provider, for example, will start charging you a funding charge immediately, even if you still have your own cash available. That's just crazy. So all these things will work against you, especially when you're trading a smaller account. But understand, short-term trading, there's a lot more drag associated with it. So the rule of thumb is, in my view, there's not a right or wrong answer, but kind of $15,000 is the bottom line, I believe, for short-term trading. More is better, not less. If you've got $100,000, you'll be a lot more successful putting your $100,000 to work than taking $10,000 and giving it a try. Don't trade short-term systems with a small capital. The probability of success is very, very small. Work hard at getting your costs down, even if it means changing brokers. I know changing brokers is a pain in the ass, but look, it's your money. You've worked hard for it. You want to put everything in your favour. And sometimes that means you've got to change brokers. It may actually mean that, hey, I'm going to sit aside, I'm not going to trade for the next 6 months until I can earn some more money. If you're only going to trade with $10,000, what sort of trading portfolio would you recommend? I really wouldn't go short-term trading with $10,000. Growth portfolio, again, if you're going through IB, you could probably get away with it. Growth portfolio only trades about 30 times a year. But again, you've got to make sure you use an absolute discount broker.